Hello everyone, Maurice and welcome to Things Invest, where we talk about investing, finance, and professional development. For today's video, it's purpose only. The investment I'm going to talk about today would be Ethereum and Bitcoin. With respect to both cryptocurrencies and just across the overall cryptocurrencies market yesterday, it was a relatively green day, right? With respect to Ethereum, it was about 3.5% yesterday, and Bitcoin was up about 2.5% yesterday, respectively. And the main driver, as I covered from my Ethereum video that I posted yesterday, is mainly driven by this something that we call the safe haven effect. With respect to the release of the procedures or the process of the tapering from the Federal Reserve that we are anticipating going forward, that have some sort of a negative correlations to equity market because of the fact that, with respect to the quantitative tightening that the Fed is expected to perform on the economy going forward, it will subsequently cut off the cash flow, that's been circulating or being stimulated from this quantitative easing procedure that we've been enduring, right? Which is the reason that we were able to obviously get the stimulus check that we've been getting on a monthly basis, which is the reason why the stock market has been propelling upward, which is why the reason why most corporations hasn't been, frankly belly flop because of this whole detriment from the COVID situation, right? And as a form of safe haven investment vehicle like cryptocurrency, this news subsequently have that negative correlations of propelling the value of Bitcoin and Ethereum upward. However, as of this morning on Friday, because of that whole pump that we incurred yesterday, it seems that we are currently experiencing some sort of like a mini sell-off, right? With respect to Bitcoin, currently down about 3%, and with respect to Ethereum, it's currently down about 4% so far. So I'm gonna go through a technical analysis to see what do we see, these price point going forward from here, right? Are we gonna see more consolidation going forward? Are we gonna see more of a dip going forward? Or are we gonna see more of a surge going forward? Also going to give you guys my price level target for year end 2021 as well. So stay tuned, stick around, let's make some money. So moving on to Bitcoin, I think Bitcoin is a relatively more stable coin, obviously because of the fact that it demands a much higher valuation and price point in comparisons to Ethereum. And the volatility is relatively lower. I mean, talk about volatility, that's a joke, right? But the volatility was mainly driven by, in a diversification perspective, more driven by corporate investors, right? And ever since that balloon popped, after the SNL show from Elon Musk, it kind of drove down, right? But the drove down was really mainly driven by the corporate investor, right? You see this one-time mega red candle. This was mainly driven by corporate investor, right? One of the big whales decided to sell, I don't know, I think a couple billions worth of Bitcoin right here. That subsequently drove them more of a scare off, and then some people thought that was the dip, right? And they kind of bought back up, which I guess you could say that was the dip. But if you look at how substantive was the consolidation level before, you could say that it was relatively shallow, right? You could say that we had this one platform, but that wasn't really like a consolidation, right? We had a bunch of negative, I wouldn't even say consolidation. It was just like a more of a downward escalator curve, just depicting more selling pressure. And then we had this like very fluff type of consolidation level. But after that, nothing really existed after that, right? So these are not really consolidation level. It's kind of out of whack if you look at it, right? So this was like a mistake, if you knew about technical analysis, and that wasn't the dip. It was just basically people thought that was the dip because of the fact that we sold off about like $15,000, which is a lot of money, right? So I understand why people felt that way. It was down about like 35-40% at that point, right? And we got bought up, and some people thought that, oh, it's just a reversal, right? And little we know, we subsequently drove off even more because of just a lack of, market pressure. And also one of the additional balloon pop moment was with respect to the Chinese news that we heard from the foreign government, have the, or foreshadowing that they plan on restricting or putting some more compliance pressure around cryptocurrency exchange in China. With that perspective, it drove even more of a negative pressure, right? Because it's counterintuitive to obviously control something that is supposed to be decentralized, right? So that drove more of a selling pressure, and eventually got back down to like basically the rock bottom of the $29,000. And ever since then, we've kind of consolidated sideways in this fashion, like zigzaggy, but like the zigzags obviously much smaller than the Ethereum zigzags. And with respect to like the swing trades that we can do here, I think the bottom is truly formed at the $34,000 and 500, and the top is the $37,000 and 500. So it's like about like a $3,000 swing left and right here and there between these walls, right? So if you want to buy like a short-term investor, like 34,000 would be great. Or also like a secondary basement level would be the $31,000 level, which is again right the a true market resistance, right? The flat number of the $30,000 mark. Investors typically like to buy that up, right? Because it's just a flat number, people easy to look at, and they always look out for that mark, right, before it breaks through, right? And so like you could hold that for long term if you're a long term investor, but you could also like sell on top if we hit back up to the $38,000, right? So it's kind of like a sideways trade. And in terms of like duration, you could like look at the mark, right, from May 30th to May. So it's kind of like a weekly swing trade type of cadence that we're currently enduring right now. So next week you probably see like or during this week you probably see like going back down to like the 34,000, and then by like Tuesday, Wednesday, we might go back up to 38, and then eventually sell off by Friday or so, right? So that's the cadence that we're going to be seeing going forward. Seems like the MACD is confirming it. We are going to see more of a propensity to go downward. RSI is dipping downward as well. So these are all coming into fruition as we speak right now. And some people have been asked me, are we going to go back down to like all the way to the $24,000 level or like the low 20? I think the likelihood will be relatively weak because of the fact that we have such a strong psychological resistance at the 34. We also have a very, very strong psychological resistance at 31, which you could see a bunch of levels of testing here before the big rally, right? On top of the fact that this is a psychological flat number resistance level as well, right? But if we break that 31, that's a pretty steep fall from here because again, right, there is lack of substance around these levels of the 27, like from the spread of 24 all the way to the 30, right? So that's a pretty steep fall from here, and if we break that, that's where we're going to be going next, right? We're basically going back down to the $24,000 level. Which I actually hope that it will happen because like that will be just an amazing opportune time for investors to buy in, right? So something to be mindful, but I think the likelihood of us to do so, you need to crack through like three walls, and these three walls all have sub walls, so very unlikely but possible. But that's something to look out for. So obviously you don't always want to be putting all your eggs in one basket, right? You want to further diversify. You want to slowly de-risk by dollar cost averaging at the right levels to ultimately, on average, right? That's why it's called dollar cost averaging. Average out your risk profile that you feel comfortable holding it for a long term, and eventually patience and time will beat the game and will beat the market, and you'll make a great profit from here. And with respect to Bitcoin, I think again, right, with respect to the swing trade perspective, currently we're holding about 2.5% on the corporate adoption level, selling down from obviously the 5% mark, right? And currently, I think the fair level to get in would be the 34,500, which is the bottom of the swing trade perspective. And if we get down even further, to even more of attractive level, right, the 30,000 mark, which is the flat number, right? That's an amazing price point for you to get into. Knowing the fact that again it's a mental psychological resistance level that we've been consolidated for quite some time, I would say in the last years or so. And if there's something even more unfortunate that we crack the wall, we have a pretty steep fall all the way back down to the $24,000, and the because of the fact that we never had any consolidation prior, or any substantiveness around that area, right? The 30,000 to the 24, it's just like kind of like a blank area that we never fill. So it's kind of like a gap in the way if you think about it that way. That needs to psychologically retest before we pump up, right? So it's like kind of like building a building, right? You need to have the right cement, you need to have the right foundations of consolidation for you to erect or build up a building so you could have sustainability going forward, right? So that's something that we need to look out for, right? Don't load all your money into one basket. further dollar cost average, chip away, learn how to risk mitigate by dollar cost averaging to average out your risk over time, that eventually time and patience will pay off, right? In respect to my assumptions here, 10% of corporate adoption, that would translate into $138,000 per Bitcoin, comparable to Ethereum of 4 times your money from here if you buy it at this entry price point right now. So that's it for today with respect to my technical analysis. I really appreciate you guys for dropping by. Hope you guys have more clarity and transparencies around the trades that we're looking at, right? These cycles are supposed to happen. There's logics and psychology behind the price fluctuations that we're seeing. And I think with respect to this mini sell-off that we're seeing across the cryptocurrencies market is logical and it makes sense. And we kind of saw it coming based on my previous videos, right? So hopefully you guys don't get so scared and stay calm and stay collected with logics and applications of just try to understand the causation effects between the two, right? And hopefully you guys gain some insights out of it so you could execute the trades in a more strategic manner going forward. Please hit the like button, also the subscribe button, also the bell notification to watch out for the next video coming up. Take care. Bye.